Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. And this one, I've been trying to do this one for a long time. Joe is just a really difficult guy to get a hold of. So is it still Precision Optics Corporation, or is it it's Precision Optics Corporation Inc., I guess? Is that what that is?
It's Precision Optics Corporation Inc. That's right. We usually leave the ink off because it is a little repetitive, but yeah, that's right.
So the symbol used to be PEYE, right?
That's correct.
And
yeah.
Now it is POCI.
That's correct.
And the reason for the change is because you just uplisted to the NASDAQ.
Correct.
Now I've been in the stock for a while, and it is a turnaround story. And so on the NASDAQ, POCI, which I have to commend you, in this market environment, pretty impressive thing to pull off, and not get crushed, right? I mean, that's pretty impressive. We'll state that, number one.
Well, thanks.
And you came in and took over how long have you been there, Joe?
So I've been here about 20 years. I took over as CEO a little over 10 years ago.
10 years ago. Right.
Yeah.
Okay. So Joe Forkey, thank you very much for coming in and sharing the story. Why don't you do me a favor and give us a little bit of background on you and kind of how you got to this role, and then maybe give us a little background on what exactly Precision does.
Sure. So my father started this company back in 1982. This is our 40-year anniversary. And you asked for some background on me, so I'll go through that quickly. I went away for a number of years. My father asked me to join the company many times, and I told him no. I was quite interested in science and math and physics, and so I got a bachelor's degree in math and physics. I was fortunate to work with some really great people doing some PhD research, so I got my PhD in applied physics, and then I discovered biophysics, so I did a postdoc in biophysics. Again, worked with some great people. Got to the end of my postdoc, and we had some pretty significant success, some good publications. And I discovered that I really enjoyed building the microscopes that we used more so than I did the scientific results. And that's when it was clear to me I couldn't become a professor. I wouldn't be happy doing that. I didn't want to write papers. I wanted to build stuff. So I called my father and came back and joined the company in 2003, full-time as chief scientist, and then was fortunate to work with a number of people on the board of directors to learn about the business side of the company. My father retired a little over 10 years ago for medical reasons. He's no longer with us. He passed away a few years ago. So I took over. Oh, thanks. Yeah. But I took over as CEO about 10 years ago. The company, in the meantime, so let me tell you a little bit about the company, and then I'll tell you about what we've done with the company in the last 10 years. So the company started in 1982. It's an It has been an optics company for its entire history. We've been involved in a number of different markets and making different kinds of products. We've been involved in defense. We've been involved in communications, telecom, but we've been involved in medical devices for the entire 40 years of the company. The company did a lot of defense work and medical work in the 1980s and the 1990s. We developed our own line of endoscopes. We took a shot at selling directly to the hospitals. That was a very difficult thing to do. We recognize that our talents are on the technical side, not in the area of selling into hospitals, which is a whole discipline in and of itself. In the late 90s, we were involved in the telecom bubble. The stock price went through the roof. The stock price at the end of the telecom bubble came crashing back down. And it was right after that that I joined the company. We had a number of layoffs. We had to sort of restructure a little bit. We had some really supportive investors who have stuck with us over the last 15, 20 years. And about 8 or 10 years ago, when I took over as CEO, we recognized we had to change our business model a little bit. So let me tell you a little bit about that and the way we run the business today, at least the core of the business. And then I can talk a little bit about some of the acquisitions that we made. The biggest part of the business is in medical devices. We're doing more and more with defense aerospace because we recognize there are some applications there. But the biggest part of the business is designing and manufacturing medical devices. And the way that we do that is we have sort of staked out some very specific areas within optics, which is a broad discipline. In particular, in the areas of micro-optics, in the areas of 3D imaging, and in the area of digital imaging. And so we've developed IP around those specific areas. We've developed some technology. And our approach now is to go out to medical device companies, so companies like Johnson & Johnson, Boston Scientific, as well as really well-funded startups who are pushing the envelope in terms of what can be done medically. And we will demonstrate for them the technology that we've developed. And if there's a match, they will ask us to use that technology to develop a specific product specifically for them. So the way I like to describe it is we sell access to technology, and we take our technology and turn it into the size, shape, and color that particular customer needs for that particular procedure. The business approach that we've come up with is the following. So we have a very, very good technical team that can design products based on this technology, and incidentally, that continues to push the envelope in terms of the technology, developing new know-how and new IP. And so we will take that development team and go through a product development process, which typically will take anywhere from 1 to 3 years, where we, as I say, we turn our technology into the product that our customer needs. Now, because it's very unique technology, we require that the customer pay us for that development work with the marginal profit. And we also insist that we maintain ownership or access to any of the IP that's developed out of that process, because it is based on the IP that we're bringing to the table when we start. Now, sometimes, of course, we have to negotiate their ability to access the technology for their particular field of use, et cetera, et cetera. But we don't just do the development work and hand over the package of design prints or production prints. We maintain the underlying core technology. So then once we finish the development of the product, we roll it into production and build the product for the customer. Typically, when we get into production, these programs will last for many, many years. We have a couple of programs, one of which has been going for over 10 years in production, another of which has been going for over 25 years. Same product day in and day out that just continues to run. And the reason for that is that there's high barriers to entry for competitors to design and build the same product. There's also a great aversion to risk in the medical device space. Surgeons don't like to change the products that they're using. They get used to things that they're doing. And they don't want to take the risk of using something new for the same procedure. They're always interested in learning about new procedures with new devices, which is really where we work. The other reason, of course, that there's an aversion to risk is because of the strict regulatory requirements that are on the products. So that's our core business technology. Now we have a couple of other divisions that we also work with. One is a division that makes micro optics themselves, the very small optics, and some of those are sold directly as opposed to going into the design of the products that we make and then the production. So we'll sell just the optical component, the very small optical components. And then the third group, which comes from an acquisition that we can talk about later, is a group that works solely on optical components and small subassemblies of all sizes. And so they're very good at satisfying component level requirements. And it's a good sort of second division to us, because that group is working on individual components and subassemblies. The core of the business is working on designing entire devices and then building entire systems. And then that micro optics group sort of fills in the sort of the limit of technology in terms of what you can make for very, very small optics, and supports both the component business as well as the systems and device business. So that's a pretty long summary.
Yeah, but it's a comprehensive one. You did a good job there, Joe.
Get us started.
You did a good job, man. So you picked the perfect time. I mean, you kind of hit a grand slam when you took over, right? Because then you got to experience COVID.
We did experience COVID. That's right.
Yeah. I mean, pandemic. I mean, that was good timing too, right?
Yeah.
I mean, you're becoming a seasoned CEO by force, right?
Well, you have to deal with the dips as well as the upside. So you just have to keep going. But it's true. We actually so I had been CEO for a number of years, and we had been putting this business model in place. And of course, given this business model, we had this IP, we had to sort of spruce it up a little and fill in some gaps. Then we had to go out and tell people about it. Then we had to go through this product development process, where even though we charge a premium for the engineering work, our sales level were still very low. In just about 2018, 3 of our products came out of the product development pipeline and went into production. And for the first time in many, many years, we were EBITDA profitable. And that lasted for about a year. And then COVID hit and everything sort of stopped. And those 3 products, all 3 of those products, pulled way back. 1 or 2 of them went on hold. The other one went down to 25% of where they were. And so we weren't quite at break even again. Took advantage of the PPP. We had some good long-term investors that stuck with us. And then we came out of the other side of that. And we're basically, last year was about break even. And this year we're back to positive EBITDA.
So you didn't, even though those things happen, right? It wasn't as though the customer, because a lot of the the elective surgeries
that's
weren't
right.
happening, right? So
that's right. Yeah.
Because of that, there was no reason to have the robotics, right? Or the machines that you guys
the optics. Yeah, that's right. So we had one customer who they came to us and said they needed to pull back. We had a long-term, 2 or 3 year contract with them with guaranteed release amounts for every month. And they called me up and said, Joe, we had 1 procedure in the entire country last week. He said, I can't keep inventorying all of this material. So they basically said, we want to stop and take a break. And we talked about it. And this particular product is very challenging to build. And even though we have detailed procedures and documentation, there's a value in having the assembly techs continue to build it sort of week after week, month after month. You don't want to stop a line like this for a year. So I basically said to our partner, we want to work with you. We understand that there's an issue. We can pull way back, but it's in your interest and our interest not to stop completely. And he understood that. And so we were able to pull back to something like 20 or 25%. The good news is now they really appreciated the partnership, right? We figured out how to set things up or how to modify things so that both companies could get through the difficult patch. And now the good news is they're on the other side of it. We're all on the other side of it, and they burned through some of their excess inventory. We finished out the order that we had with them. actually just a month or so ago. And so they've given us a new order to continue, and they're starting to talk about ramping back up to levels that are even beyond where they were before the pandemic. So,
and now you got a customer for life because
that's exactly right. Yeah.
Right.
Yeah. It's a good partner. We like to say we don't look for customers, we look for partners, because that's really what you want is, especially in a small industry like this, everybody knows everybody else. And so, working together like that really has a lot of value.
So throughout that time frame, you also got, I mean, you're primarily medical, but then you also got an opportunity through defense and aerospace, right?
Yeah. Yeah. So in the company's history, way back in the 80s, we did a lot of defense aerospace along with the medical. In fact, we did all of the optics that were used in the night vision goggles in the late 80s, in the first Gulf War. We did all of the optics for the night vision goggles. So we were quite familiar with the defense aerospace marketplace. We sort of got away from it during some of the history when there were other things we were working on. We were working on telecom. And then at the time when I took over as CEO, we were really recovering from some other things. And I basically said to the team, we can't be doing everything for everyone. We have to be very focused. And so we decided that the places where our technology had the most obvious application and the biggest, most easily accessible markets for us was in medical devices. So we focused on that, and we purposely did not go after defense aerospace opportunities because, again, we were small and we had to be focused until we got beyond break even. Interestingly, even during that time, some of the folks in the defense area and the defense market who knew about us from some of our historical work would stop by the booth when we were at the optics shows. And so we showed them some of these really, really small optics that we made. And they asked us if we would take a look at a couple prints that they had. So we did. Long story short, even when we weren't targeting that market, there were one or two of our historical customers or someone who saw us at the show who asked us to work on a project. And that, of course, we were happy to do. So I mentioned before we had 3 products that went into production in 2018. One of those was for a great big defense aerospace customer. And I should say, by and large, I can't talk about who our customers are because we have NDAs with them. But I already said they fall in 2 categories: the great big, J&J and Boston Scientific kind of customers in the startups, and the defense side, it's sort of the same thing. So that customer that I'm referring to is one of the largest subcontractors in the country, and it's a name that you would recognize. But at any rate, even when we weren't targeting that market, they were finding us because there clearly were some opportunities, some applications for the things that we were doing. And what we've decided now that we're beyond break even, EBITDA break even, we have some more resources. We're a bit larger in size, and we have a bigger sales group. Now we are starting to target the defense aerospace market in a concerted way. And we announced just about 6 months ago that we have a new defense aerospace program, although we've been working on prototypes for a couple of years, that now is running at about a $3 million per year run rate, which makes them among our biggest, if not our largest customer on an ongoing basis now. So it made sense for us, 5, 6, 8 years ago to focus on medical device, and there's plenty of opportunities still in medical device. But now, as I say that we're bigger, we have more resources, and we have the opportunity. We'll work in the adjacent market of defense aerospace as well.
So over that time span, I would assume that you probably had a very narrow breadth of customers, so you were reliant on right, a lot of your sales coming from maybe just a handful of players.
Yeah, we had a very high concentration, revenue concentration, with 3 or 4 customers representing 40 or 50% of, actually more than, at one point it was well north of 50%.
And that's kind of a scary position.
It is a little scary to be in that position. But again, we had good customers. We still have good customers. and we develop long-term relationships with them. And I mean, as a practical matter, that was the place we were in. So we worked hard to make sure that we could satisfy what they needed. And luckily today, because we've grown some, both organically and through some acquisitions, we have a much larger customer base. And I think now the largest concentration is one customer is maybe 10 or 15%. I guess about 15%.
It's much more manageable.
Which is much more manageable, right?
Right.
And to get to 50%, it's probably, I mean, I don't have the numbers in front of me, but it's many tens of customers for sure.
Okay.
Yeah.
So let's talk about, let's move on to the acquisitions that kind of to where you are now.
Yeah. So that core capability that I described and that core business approach that we take is still the biggest part of our business. But in 2018, after we broke through, became EBITDA positive, we had recognized that the optics industry is pretty highly fragmented, and we always believed that once we got through break even, that it might make sense to look around and see if we could grow by acquisition, as well as growing organically, particularly as a public company. So in the summer of 2019, we did our first ever acquisition. This was of a company called Ross Optical, which is in El Paso, Texas. I should say that the company headquarters is in Massachusetts, where it's been all 40 years. But this company, Ross Optical, in El Paso, Texas, is now the division that I referred to earlier, which does the component business. So again, the historical business was designing and manufacturing optical systems, in particular medical device systems. The group Ross Optical, which is in Texas, was really working on optical components and on small subassemblies. They have a very interesting history. They were manufacturing all entirely in the U.S. optical components for many, many years. And in the late 90s, early 2000s, they recognized that there was an opportunity to source optics overseas and outside the U.S. And so they've developed over 20 years or so, maybe even 25 or 30 years, a very broad network of suppliers throughout the world. So they still do some manufacturing in-house, but they also can get to the very good price points that many customers are looking for when you're looking at individual optics or small subassemblies. And what I like to say to people is it's very easy to find an overseas optics manufacturer. It's very hard to find a very good, high quality optics manufacturer overseas. And that's what this group has done. So they know all of the optics manufacturers in the world. They've been to Europe, Eastern Europe, India, Asia, South America to some extent. And so when a customer comes to them, they can advise the customer on what can be done from a technical standpoint, whether their print is good or not. Then they can find the right place to source it. They do a very extensive QC in-house, and they can do some additional manufacturing in-house as well. So that now is so that was our acquisition in 2019. Economically, it was very positive. The terms of the acquisition were good. The culture fit very well, which I think is critically important when you're putting small companies together. The people have to get along, because there will be challenges. And unless you have similar attitudes about how you work together and how you deal with employees and customers, it'll be challenging. So it made sense from an economic standpoint. The finances were good. It's already paid for itself, by the way, in 3 years, which is great. The culture fit very well, and it fit from a technology standpoint, again, because POC was doing full systems and they were doing components. The second acquisition that we made was just about a year ago. This was a company called Lighthouse Imaging in Maine, close to Portland, Maine. This is a company that we have known for many, many years, for decades, 15, 20 years. And I would describe them before the acquisition as a friendly competitor. And by that, what I mean is most of the time we would be bidding against each other on jobs, but occasionally we would decide to work together and we would bid jobs together. So we had actually talked about merging the companies for a number of years, and finally about a year ago, it looked like it was the right time. Again, The finances made sense. The culture were very similar, so we get along well with the folks up there. And from a technology standpoint, it worked very well because even though we were competitors, both designing and fabricating medical device systems, they had developed a particular expertise on the electronic side of those medical device systems, even though they were imaging systems. And POC had developed a particular expertise on the optics side, meaning the design and fabrication and assembly of the glass or plastic optical elements. Many of the medical device systems today use a CMOS sensor, so-called CMOS sensor, like in the CMOS sensors in the cell phone. And that's basically the demarcation between the front end where you have all of the glass optics and you're forming the image, and the back end where you're taking the electrical signals and you're coming out the back end and processing those electrical signals with an image signal processor and such. So POC was really great on the front end, and we were using some outside resources to help us on the back end. Lighthouse Imaging was really great on the back end, and they were using some outside resources and consultants for the front end. And so now you put the whole thing together, and we really have a great offering for our customers. And so now, instead of competing with each other, we've joined forces. And already within the past year, we've had a number of customers who have said to us, "I'm really glad that you're together, because I was thinking about both of you for the next project, and I wasn't sure who I was going to go to, and now I don't have to make a decision." We've also had customers who have said to us, who have actually given us orders, who have said to us, "We've only gotten the order because we were a combined company." They said, "Either of you by yourselves would not have been able to get we wouldn't have been confident you could do the whole thing, but now that you're together, we are confident. And so we're giving you these development orders." So clearly the market is responding to the reason why we put these companies together. So the integration over the last year has gone well. Again, cultures are very similar. We think similarly about how you treat people, how you treat customers, how you work on technology. There have been some hiccups. We had a couple of people leave the company in a friendly way. They just decided they wanted to go and do something else. So we had to manage a couple of departures, but there were other folks inside the company that we could promote, and they're doing really great. The sales teams now are working very well together. So we have one sales team for the entire company, which is a great part of the integration. The technical teams are working very well together. So we have one engineering team working on one set of product development programs. And so, the integration is going very well. So both of these acquisitions have been quite successful. People ask me, are there others? And my response is we don't have any particular requirement to continue with acquisitions, but there, as I said before, the optics industry is highly fragmented. There are many other opportunities. And so we will continue to look for other good opportunities that satisfy those three things I said. It's got to make sense financially. It's got to have some technical match, and the cultures have to fit, because we're small companies, and that's critical.
So did you use was it stock and cash, or was it just stock when you did the two acquisitions?
Yeah, great question. So the first one was a unique circumstance. So the first one was entirely cash, but we sold stock in order to fund it. So we did a private placement with some of our major investors, and then used cash to do the acquisition. It made sense for that particular acquisition because the 90% owner, the founder of the company, wanted to retire and needed liquidity in order to pay off some debt that he had on a different business that he had started. So he was not interested in stock, but effectively we sold stock to investors in order to fund it. In the more recent acquisition, the Lighthouse Imaging acquisition, we did a combination of stock and cash. We raised the cash by taking on a term loan. So we built a relationship with a local bank. That's the first time we've had that. Along with it, we have a line of credit now, which we can use to help with some of the working capital needs of a growing company like ours. And so we ended up paying, I think, $2.85 million in cash. We also did a limited raise with some shareholders as well. some investors. And then we use 2.5 million shares as well. So we use the shares as currency to do the acquisition. In both cases, we had earnouts as part of the deal, so that it really helps. The earnout really helps to bridge the gap between what the buyer thinks is the certain value of the company we're acquiring and what the seller believes their potential value is if all of the things that they're working on when we do the acquisition comes through, right? And so that's worked out very well.
So how does your backlog in your pipeline look today compared to prior to the Lighthouse acquisition?
Yeah. So the pipeline, so when we talk about pipeline, we're really talking about the long-term pipeline, which is the product development pipeline, because this is really what drives the growth of the company. The way we view it is the engineering team, the product development team, is really the pump that takes our customers from when they first come in the door and say, we need something that will, image this part of the body, and goes through the process of turning that into an actual product and pushing it out the other end and transferring it into production. I said before that once a product gets into production, it tends to stay in production for a long, long time. So a big part of the way that we increase our revenue is by running more programs through that product development pipeline. Because once the product's in production, it stays in production for a long time. So we keep adding more and more of these products into production, and it just keeps growing the revenue higher and higher. In addition, once the product gets into production, it has the opportunity to start. Typically, we like to see products start at $1 million or so per year, and they have the opportunity, as our customers gain more market share, for those products to increase in revenue as well. So both of those things contribute to the growth of the revenue. But critical to that is that we have to keep the product development pipeline going. So once a product comes out and goes into production, we want another program to come into that pipeline as quickly as possible. And it's really the size of that pipeline that limits the rate at which we can grow. So one question is, why not just make the pipeline larger? And so we are working on hiring more technical resources in order to be able to do that. There is some limit, because you can't have an engineering team of 2,000 and expect you're going to have the same kind of focused work. But we have some room that we can grow. But back to your question, the engineering pipeline today is larger than it has ever been in the 20 years that I've been here. We used to talk, 4 or 5 years ago, we used to talk about the 3 or 4 programs that were in the engineering pipeline, maybe 5 programs that were in the engineering pipeline. Today, it's something like 15 or 20. And so the real goal here, and we believe we can achieve this because of the size of the engineering pipeline, is that we push out 2 or 3 programs every year, which, again, if you take the numbers I just said, where we're looking for about $1 million a year, that's $2 to $3 million a year of growth, just because the programs are coming out of the pipeline going into production. If you add on to that a couple $1 million in growth of the base that you already have, you're talking about $4, $5, $6 million a year in growth. We're running at a run rate now of about $20 million a year. So that can lead to pretty nice growth over time.
Well, we're hoping so, right?
We are. Not just hoping, we're planning.
And
but of course,
and not to,
there's a lot that can happen, but
there is a lot that can happen. I mean, we've seen that, right? I mean, who would have thought COVID, and then you come out of COVID and you step right into Russia going in and taking over, or trying to take over Ukraine,
supply chain issues and all the rest. Yeah.
Nobody would have seen that, right? I mean, last thing we needed. But and a market for the micro cap and small cap sector that isn't exactly very friendly, and hasn't been for about 15 months now, right? And I'm talking across the board. What's different with you is, throughout all of this not fun small micro cap market, it's been a bloodbath for a lot of people. But you guys decided, heck, we're going to go ahead and uplist from the OTC to the NASDAQ.
Yes,
now,
we did.
Were you on the NASDAQ before? You were.
We were on NASDAQ back in the 90s. So the company went public in the early 90s. We were on NASDAQ for most of the 90s and then fell off after the telecom bubble burst. Not long after I joined the company.
Not long after
so
you
it
joined
was
the
maybe,
company.
I don't know, around 2005 that we fell off.
Good christening. Good christening.
Yeah,
right?
it was. Yeah, it was. Yeah. We tried to say, we did a reverse split, tried to stay on, and then the stock kept falling. And we basically said, look, we got to step back and figure out what we're going to do here. So we went on to the bulletin board and then on to OTC. We were on OTC QB for, oh goodness, I don't know, maybe the last 10 years. But we were fully reporting the entire time to the SEC and continued.
With the intent that you were coming back.
With the intent that we were coming back, and with the idea that there was an opportunity to do acquisitions and other things as a public company, and we believe that we'd be able to grow the way that we need to in order to be a public company.
So let's talk about I mean, what you have to admit that, all right, you don't have to admit it, but it was pretty gutsy to decide to make that call, right? I mean, to make the move up.
Yeah.
How did you do it? Was there a banker that took you, or?
No, so we did. So we did the uplisting ourselves. We have a really great team, including our CFO now, who's been with us for a couple of years, and our board of directors, most of whom have been with us for a number of years. We have one new director who came on with the acquisition of Lighthouse about a year ago. But we felt that we had the team internally to be able to do what we needed to do. We have great, corporate counsel and accountants and such. And it took a little while longer than we thought. Once we told everyone we were gonna do the uplisting, it took us a few months longer, but ultimately we were able to get there. I think, in terms of the last couple of years, and the issues with microcap stocks and the market in general are certainly real issues. Our attitude is that at the end of the day, we're going to be successful if we execute on the business plan that we have. And so that's really what we've done. We talked a little bit about COVID, and that certainly had an impact, and we had to regroup a little bit and figure out how we were going to get through that. But our customers stuck with us, and we came out the other side, and we started to show that we were growing revenue again. And we did the one acquisition that was successful, and then we got the second acquisition. So our basic attitude is, we want to be supportive of the stock for sure. That's part of our responsibility as management of a public company. But at the end of the day, if we execute on what we're doing, both organically and by looking at ways to grow through acquisitions, that in the long run, the company and the stock will be successful. So when it came to deciding whether or not to uplist, we had been planning on doing that for some time. And after the acquisition and after the growth in the revenue and posting some numbers that were moving in the right direction, we decided that we would go ahead and do it and continue executing and supporting the stock, with the idea that in the long run, that was the right thing to do.
To me, it just says, I mean, because you were there for the coming off of the NASDAQ, right? Going back on, I mean, you know what you're stepping into. It's not like you don't know what you're stepping into, right? So
yes,
that to me says there's a lot of confidence on that side over there, right? You got a lot of confidence in I mean, you just went through a pandemic, damn near, things shut down, but you're not gun shy right now. You're moving forward, and that's why do you think that is? Yeah.
So we've been at this for quite a few years. By this, I mean this sort of new approach to the business model that we put in place some 8 years ago. And even though there have been some ups and downs, by and large, it's working in the way that we anticipated that it would, and we're seeing the positive movement, and we're seeing some of the positive momentum, and so on a number of fronts, we see that things are moving in the right direction, and so because of that, we're confident enough that we decided to move forward with the uplisting. So I'll never sit here and say that nothing can go wrong, because I've been through it. I know things can go wrong, but we have enough confidence that we have a path forward, and we have enough confidence given the recent positive momentum that we've started to generate, that we think it's the right way to go. So to summarize some of those things, we've already talked about the two acquisitions. They were both very successful from a standpoint of the financial aspect of it, and from the standpoint of integrating the teams and seeing the response from the markets that we expected. In both cases, the markets have responded, the markets that we sell into, I should say, have responded very positively. And so from the standpoint of being able to execute on M&A transactions, we have a track record now, and we expect that there's going to be more along those lines. From an organic growth standpoint, we've had record revenues over the last couple of quarters. The last quarter, we just announced record revenue that was 118% higher than the revenue a year ago. On an organic basis, it was something like 64% year-over-year increase. We're seeing our margins increase, which is what we've expected all along, because they had been depressed a bit because we were not fully utilizing our resources. We fully expected, once we get our revenues up, that we're going to be better utilizing those resources. And in fact, that's what's happening. And when we look at the bottom line, we were within about $100,000 of break even. And from an EBITDA standpoint, we were $110,000 positive. Which of course is all moving in the right direction. We've talked publicly about the expectation that our revenues, we expect, will grow by about 20% year over year, which is a pretty good rate of growth for us. And we expect to be solidly positive EBITDA, positive cash flow, which really is an inflection point for the company. This is the first time that we've been there. We've been working towards it for a long time. But we've achieved that bit, and we see a path to getting greater growth going forward. So for all of those reasons, there is a lot of confidence. Again, we know that there can be hiccups, and we've put together a team that can manage the issues that come up, I believe, and that also is part of what gives us the confidence.
Yeah, I would say you deserve a pat on the back there, Joe, because
well, we're not done yet.
Yeah, I know.
We're working for the future. There's still a long ways to go.
It's a team effort. It's not all Joe.
It is a team effort.
It's team effort. But you've been strategic, and you've been climbing back, and you've had some serious challenges. And you guys, like I said, this is a bold move. In my mind, this is a bold move. Right. And to do it on your own, you don't hear that very often. Right. I mean, you really don't. You don't hear that very often. You hear, and I can think of one off the top of my head where it's financial institution. We want to take it to the NASDAQ. We'll take it to the NASDAQ. And, you should do a cap raise when you're going to the NASDAQ, strengthen that balance sheet. And, it sounds all good in theory.
It sounds familiar. Yeah.
Yeah. Does that sound familiar? I mean, but you didn't do that. I mean, and that's to me, that speaks volumes. And then as I look out over the economy right now, and I look at the different companies, I mean, if you're a small cap company that is in need of capital, you are not in a great spot right now. And if it were me, and I had a potential partner or potential JV or whatever, or somebody to potentially acquire me, or go to the capital markets and do a really, really shitty deal that's going to dilute the hell out of the shareholders, I think I'd be taking a harder look at who do I partner with, right? And that's why I think there's probably a few potential opportunities out there for you guys to step up, right? And that could be a good fit. I would say that there are a lot of companies over the last 15 months that maybe 15 months ago they thought their valuations were incredibly sky high, and that party has been rained on. And if you're in need of capital on top of that, you're not sleeping, man. I mean, you're just not sleeping at night, right?
Yeah.
So would you say that they're, and I'll just say this, I think we're going to know when we're real close to the bottom of this, bear market, because it has been a bear market for the microcaps. It's been a bear market. It's not a question of, we've been in it for a long time. We got some companies that down 90%, but they also grew. I mean, not everybody killed their company. They grew. They have strong balance sheet, no debt. How are you on debt, Joe? How are you on debt?
So we took out the $2.6 million term loan when we did the acquisition. At the time, it was a variable rate, but we've locked it in now at 7%. And making the monthly payments, the bank has been very supportive. They've increased our line of credit once already. Again, in order to support the working capital needs. Beyond that, I would just say that we have been fortunate. You said it's a team effort, and that's absolutely true. The employees of the company are critical members of the team for sure. We're very proud of the fact that we have employees that stay with us for a long time. I think it speaks sort of both ways, right? The company is successful because of what the employees do. And the fact that they stay, I hope means something about the way the company treats the employees. I've already talked about the fact that we see our customers as partners. We see our suppliers as partners. But with regard to liquidity or access to capital, I also want to point out that we have some really solid, long-term, significant investors and shareholders who have stuck with us over the last 5-6 years as we executed on this new business plan. And they've been there when we wanted to do these 2 acquisitions and stepped up very quickly so that we were able to do that. I think, having an entire team that works as well as it does together, again, is part of why we have the confidence in where we're going to go in the future. And it's also part of why we've got a solid balance sheet, to be sure. But we heard exactly the kinds of things that you said when we were uplisting to NASDAQ. Do a raise at the same time. That was an ideal time to do it. And our attitude is we've got some great supporters that we can go to if and when we need the capital. They've demonstrated that they were supportive in the past. And our attitude is raise the money when you need it. When we have the next target there ready to go. So yeah, I can't say enough about how supportive the investors are, and what a great team we have with our employees and with our partners who are customers and suppliers.
And correct me if I'm wrong, but during that time, I mean, it's not like you were earnings calls. You weren't having a lot of real detailed earnings calls over that time period right? I mean, you weren't putting out forecasts because right? I mean, it was kind of like trust me thing, right?
So, well, yeah. So there was a time when we weren't doing anything except filing our 10Ks and our 10Qs, right? When we were sort of restructuring and figuring out where we were going to go. We've come back with more IR activities since then. But you're right. Even a year or 2 ago, we would talk about the programs. We would talk about some of the customers and about the markets. But we haven't been putting out detailed forecasts and numbers that guidance for what people should expect. It's really the business model that people have bought into. Yeah, it
was a trust me thing, right?
It was it was. I mean, yeah. So in terms of our major investors, I'm pleased to say that
they trust.
I think they know us pretty well, and we've gotten to know them pretty well, and it's a good partnership. Yeah.
So let's talk about it. You've got a strong investor base. You've got a stronger staff, right?
Yeah, we have a great staff.
You've diversified your portfolio to go after more business with Ross and with right?
Lighthouse. Yeah.
Lighthouse.
Yeah.
You've gotten back into defense aerospace business,
Mhm.
with Russia doing what it's doing, that's probably not going to slow down anytime soon. As a matter of fact, that could probably expand. If I'm not mistaken, maybe I am. I think it was maybe as a quarter or two ago, where this program that you are doing with Department of Defense, it's kind of led to other potential opportunities, right?
There are, yeah, for sure. So for most of our customers, once we get through one program with them, if they have other optics requirements, other imaging system requirements, most of the time they will come back to us first to see if we can bring to bear our technology on it. You're referring to one of the defense aerospace programs in particular, where we talked about some prototypes that we were working on with that customer. I think it was maybe 6 months ago or so. Now, that particular program has gone on hold since we did that. We were successful with our prototypes, but these are big programs. But that's okay, because sometimes those come back, sometimes they don't. But it means that they were happy enough and satisfied enough with us in the first program that they're coming back to us for the second program. And even if this particular program doesn't come back, there will be other ones that will come back from this customer. So there are lots of opportunities to leverage an existing relationship with a customer, because I think it's because we do such a great job, and because our team communicates so well and comes up with the best technical solutions, that they'll come back to us for the next program that they have, or the next program after that. So yeah, that happens pretty often.
And I mean, optics are, I can't see optics becoming less important, right?
No, everything, I mean, across the board. In medical devices, we're bringing imaging to places in the body where surgeons either couldn't go before because they couldn't get equipment that was small enough, or they were going into places and they were doing things blind because they couldn't get an imaging camera next to it, even though they had to go into that space. So the requirement for optical imaging is expanding in medical device in great ways. And our ability to make systems that are smaller and smaller and smaller fit perfectly with minimally invasive surgery, which is the direction all medical devices are moving in. One of the sort of directions that the work that we were working on led us into is the single-use part of the medical device space, which is growing 2 to 3 times faster than medical devices in general. So there are numbers out like medical device market is growing by 5 to 10% per year. Single-use medical devices are growing by 15 to 20% per year. And there are all sorts of reasons why single-use devices are better than reusable. The most important of which is that you don't have to worry about sterilization. And that means that cross-contamination from one patient to another patient is virtually eliminated. There are other benefits that support that part of the market as well. It's easier for the hospitals to track devices if they buy them and use them once and discard them like a scalpel, as opposed to things that have to be repaired, have to be sterilized, you have to do other things to them. And then on top of all of that, the surgeons love it because they get the image quality of a brand new product every time they open the product. So it turns out that because we were working on small systems, there are some cost benefits to working with small systems. The easiest way to think about it is that you can process things in parallel, and you can process more of them in parallel if you're small. So the small size tends to be beneficial not only because you can get to places in the body that you couldn't get to before, like think cardiac or eyeball ophthalmology, or otoscopy in the ears, or neural for the brain, or urology. Not only can you get to those places, but also now we can make systems that are lower cost that support single-use devices. So all of that technology is just helping to accelerate and expand the places where you can add imaging in medical devices. And what surgeon would prefer to work with a suboptimal image when they could get a great image, right? I mean, there's not a whole lot that we have to sell, right? If I can say to someone, you can see this and you can see it better, it's an easy sell. In defense aerospace, situational awareness, right? Seeing what's happening is the whole thing, right? So, and in defense aerospace, the smaller size that we can make fits ideally in what the defense industry calls SWAP, which is size, weight, and power. They want all of those to be smaller. And so our smaller imaging systems fit with that requirement very, very well. For aerospace, anything that you're going to launch off the surface of the Earth, it costs more in fuel and in the space that you have to use for your rockets and everything else if you have more weight. So making systems that have smaller weight and smaller size fits perfectly there. So the unique sort of, you might even call it a niche that we have with the micro optics in the optical imaging space fits very well with the markets that we're working in medical devices and in defense aerospace. So as you said, imaging is expanding sort of across the board, from cell phones to medical devices, but in particular, being able to do imagery with systems that are smaller and smaller expand things even faster with medical devices and defense aerospace. So I think we're in the right place with this technology that we have.
Plus there's drones, right?
Oh, there are drones. Yeah, they fit in.
Those are kind of like becoming popular a little bit.
A little bit.
For situational awareness.
They fit into the category of size, weight, and power, right? You want them to be smaller so the drones can be smaller, and you're launching them. So it takes energy and takes space to do that. So yeah, absolutely. That's a good example of a place in the defense aerospace market where smaller size is better.
So it doesn't maybe sound super sexy, but really it's a pretty sexy industry. I mean, when you think about, and I just want everybody to see, I don't know if they can see this picture here. That is a dime. That is a dime right there. And that's the entire camera that is on right here. This whole thing, that's the entire camera, right? That's pretty freaking impressive. I mean, that blows my mind, really.
Yeah, we get, I like sometimes when we have company meetings, I like to tell all of our employees to take a step back for a minute, because we work on those systems all day, every day, right? And so we get sort of used to working with little tiny lenses and little tiny cameras that are that size. And I often, when we get together for company outings or whatever, I'll suggest to people, take a step back for a minute and just think about what we're doing. Because it is pretty exciting to think that we can make cameras that can go through the blood vessel into the heart and can be imaging the inside wall of a beating heart while the surgeon is doing a procedure to cure atrial fibrillation, right? That kind of stuff you just couldn't do 5-10 years ago, and it's we're lucky to be here at this time doing stuff that we get excited about, because it is. I mean, technically it's very exciting, but there's a market for it too. So
that's the thing.
Really great for us.
Back to what you said at the very beginning, where you keep the intellectual property.
Yeah, that's key to what we're doing. Yeah.
Right.
So again, to be clear, we'll negotiate licenses and such with our customers because we recognize they're not going to pay us millions of dollars and not have any access to the IP.
Right.
But what we don't do is we don't take the dollars for the development work and hand to our customer a package with all of the patents and all of the IP for them to go off and do whatever they're going to do with. The only reason one of the reasons that's critical to our business model working is that we have to continue to be able to develop this technology and continue to advance it. Part of the way we do that is through our own R&D, but part of the way that we do that is by taking our technology and rolling it into the next product and discovering things along the way that can be used in other products that we can use for other companies that are not competing with our, that particular customer. So at the end of the day, we're a technology company, and continuing to innovate, continuing to develop IP, and making sure that we protect that IP is absolutely critical to the success of the company. And that's a piece that we take super serious. We have actually turned down customers in the past some of whom were very, very large companies, because they wouldn't allow us to come to an agreement with that kind of an arrangement. They came to us and basically said, we want to pay you, you know, this sum of money, and we want you to do this work, and then we're going to take all of that and go away and do something else with it. And that just didn't fit our business model, so we told them no. And again, this was a customer whose name you would recognize. It was hard to do, but the good news is they've been back to us since then, because now they know our business model. And when it fits with what they're doing, they recognize that we have some unique capabilities that no one else has. And so they've come back to us other times and agreed to those kinds of terms.
I mean, I'm just thinking autonomous vehicles. I mean, that's going to require a lot of imaging, right? I mean, all of this stuff is imaging. It's just going to get bigger and bigger and
digital
bigger.
imaging. Yeah.
Right.
Yeah. Yeah. And now that we can do the whole thing with all three former companies all under one roof, it really is it's a powerful combination, I think.
Yeah, I think so too. And I think you have been an individual that has done what you said you were going to do. It's taken longer, but you know, some things are beyond your control. I mean, I'm pretty sure you can't control a pandemic, and if you can, why didn't you stop it from happening? Right?
Well, that one I'll agree on. Yeah, no, I don't think I could have controlled it.
So, all right. So, but you found a way to work through it, and you found a way to grow the company, and you didn't destroy the balance sheet through that process, right?
Our team figured out a way to get through all of that. Yes.
Your team. Well, yeah. Look, I don't think Joe's over there going, "Hey, it's all me." I know that for a fact. You think you have it. You respect your people. You know you have amazing people, right? And you know you guys.
I'm fortunate to be part of a team that works really, really well together and does amazing things.
Right.
Yeah, sure.
And I mean, this accomplishment of moving up. So how many shares you did do a reverse to go up to the NASDAQ, right?
We did. Yeah.
Was that a tough decision for you?
No.
No.
It's what we needed to do.
You want a minute to think about that?
No, I mean, we looked at it. So the only downside is that the public float is a little light, but I think that will correct itself. First of all, it's not so light that it's going to be a major problem, I don't think. I mean, the first day of trading had 375,000 shares traded. So there are shares out there. The other thing is, I think that will correct itself naturally as we continue to move forward and look for other strategic transactions, et cetera. And we're not going to hesitate using stock as part of those transactions. But back, so that was really the only downside that we saw to doing it. And on the whole, getting onto NASDAQ, because we had heard from potential investors that they were unable to invest because of where we were on the OTC. On the whole, it made sense to go ahead and do that. The other thing we heard from people is you got to be careful with the reverse split, because 9 times out of 10 a reverse split doesn't work. It doesn't increase the stock price. And I will say I have personal experience with that, because back in 2005 when we fell off of NASDAQ, we tried to stay on by doing a reverse split. But what one of our investors said, which I think is exactly right, is that just because two events are often correlated in time doesn't mean that they're correlated in cause. And so his point was, most of the time when companies do reverse splits, it's because of what we did 15 years ago. It was to try and stay on NASDAQ because the stock price is going down and you need to reverse split to bolster it up. What's that?
From a position of weakness.
From a position of weakness. Yeah, that's right. So if the stock price is going down and you do a reverse split, it's going to continue to go down. Our belief and expectation is that we're in a very different situation now. So our stock price was going up on the whole, and we have fundamentals that are moving in the right direction, and we're executing and we're doing exciting things. And so our belief is that doing the reverse split is not the cause of people having trouble. It's the other way around. If you have trouble and you do a reverse split, it's not going to work. If you're moving in the right direction, you do a reverse split, our expectation is that it would work. And so far, the stock price has held, which is great.
So it was from a position of strength.
It's from a position of strength.
And if you think about that, it was from a position of strength, and you did it without a bank, and you didn't do a raise.
That's right.
Which is what a lot of these companies will do, because that's the advice that they get.
Right.
But because you didn't do the raise and you took yourself to the NASDAQ, that is impressive to me. That is, I mean, sometimes words speak volumes and sometimes actions speak volumes, right? And I think the actions on this one, if that doesn't send the message to you that this is a pretty confident board, because I don't think the board would have approved it without discussing it, right?
Well, they would not have. We have a great board, but they take their role quite seriously. I will tell you that.
Right.
Which is great. That's good for all of us.
This is in a very tough environment, a lot of uncertainty, right? But I think one of those areas of strength that you've got, the Department of the Defense and Aerospace, if anything that Ukraine and Russia has shown us is that imagery is situational awareness is extremely important, right? I mean, I think that's what's coming loud and clear.
Mm-hmm.
And not only that, but if you think about the way some industries work, for example, and I'm just thinking oil and gas, they have to, I think they have to run wherever they've got their lines buried. They got to either take a Cessna or
they do,
or a helicopter, right?
Or a drone. Yeah.
A drone makes a lot more sense nowadays with the fuel prices where they are, right?
Yeah. And many times they'll do things like multispectral imaging where they're looking at different wavelengths and all of that kind of stuff. Yeah. Right. Yeah.
I think it's just going to continue. So, and you must see that too.
We do. We do. The great thing is we're at a point now where we sometimes have to pick and choose between different opportunities for new pipeline projects, which is great. That just means that we can be more selective. And
how are your margins? Are your margins improving?
Margins are doing better. Yes, for sure. So, year over year, they went from 27% to 34%, something like that. And organically this past quarter, without the most recent acquisition, they would have been 42%, which is getting to our goal of 40 to 50% in margins. And the acquisition was a little lower because it's interesting. They're sort of where the rest of POC was in 2018 before those programs came out of the pipeline and went into production. So we're quite confident once the programs that they already had, which we are now working on together as a team, once those roll into production, that they'll be better absorbing their manufacturing resources. And so their piece of the margin and then the margin of the whole company, we expect will continue to grow. Yeah.
So let's reflect back on that. Once these things start to roll and they start to capture market share and more procedures start to develop and all that, right? More doctors get trained on them, and then boom, 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 it just continues to grow. And it's typically for
a long time. Yeah,
right?
For a long time. Yeah. So I don't want to misrepresent it. There is still risk, right? Because these are brand new products. By and large, not entirely. Sometimes our customers are doing a next generation. We love those because then they're cannibalizing their own market, right? And the certainty there is much higher. But many of the programs are new things that have never been tried before. That's part of what gets us all excited, that we're doing stuff no one's done before. In fact, when things get challenging, I say to the team here, if it was easy, everyone would be doing it. We like to do stuff that no one else has done and no one else can do. Sometimes that means that it's, there's going to be some challenges. But because we're doing things that have never been done before, there are times, and there is a risk that something will come out of the product pipeline. Well, there's a risk that it doesn't work as we go through the pipeline. That's true. Although we can be pretty creative and we look pretty carefully on the front end. But it is true that, we can go through an alpha prototype and our customer takes it out and finds that it doesn't work in the field the way that they expected, and so they didn't have the specs right. And we're not doing we're doing the entire imaging system, but we're not doing the entire surgical system. So there can be problems with another part of their system. So that certainly is a risk in the development pipeline. But even beyond that, once the customer takes it out and launches it into the marketplace, it could be that they don't have the right solution. And that's a piece that we look very carefully at the beginning of the program before we take it on. We talk to our customers about a number of things. We talk to them about their financing. If they're a startup, we want to know about who's their VC and how much money have they raised and what are their plans. We look at their product, and we ask a lot about the end market and how big is the market and what's their plan for rolling it out and what are they going to do with their sales force, right? And then we look at how our technology fits into what they need, because if we don't have a good fit, it doesn't make sense for us to try and force our technology on them, and it doesn't make sense for them, frankly, it doesn't make sense for them to give us the order. We'll recommend someone else if they can do it better. So my point is, we look right in the beginning at all of those things. Part of what we look at is the market that they're selling this into, and we do some evaluation of whether it's going to be successful or not. But nobody can predict with 100% certainty whether a new product that's going into the medical device space is going to be successful. So there are times when our customers will launch a product and it wasn't quite right, and so it doesn't continue. But our track record is pretty good in choosing products that do go into the market and do end up growing over the long term. And that, of course, is what we're looking for.
Let's talk about
that really is, as long as we're mostly right, we'll be okay. And we have been mostly right.
And let's go back to that single use, the growth of the single use, right? What does that mean?
Yeah.
That means razor and razor blade model.
It is. Yeah, that's right. Yeah, that's right.
Right. So
yes,
that becomes a very nice predictable model.
It does, because it goes for long term, and it's nice long-term contracts. So the interesting thing with single use is that the price pressures are much greater. There's price pressure on everything that we do, whether it's defense aerospace or reusable medical devices. Everyone cares about price, right? You're not going to go and gouge your customer and expect to build the partnerships that we always talk about. At the same time, they recognize that we have to make enough profit so that we can keep the business running, and they recognize that. But when it comes to single use, the price pressure now is sort of an order of magnitude stronger, because you can't amortize the cost of the medical device over many procedures. You've got to capture all of it in the one procedure, and ultimately the reimbursement rates that come from the insurance companies that are set effectively by Medicare and Medicaid are that's what's going to dictate the top of the price point, right? And then from that point, you have to satisfy all of the pieces that are in the supply chain, including the hospital or the clinical center and the surgeon and the doctors and the nurses and the support staff. And one little piece in there is the medical device. And so now the cost for the medical device is very well defined, and all of our customers' supply chain, including us, has to fit within that well-defined price point. And so what I've said on a number of the last few earnings calls, we're just getting ready to launch our first single-use medical device. And we were fortunate to find a really great partner in our customer for this first product, because they recognized and we recognized that we were breaking new ground, not only on the technology side, but also on the economic side, and figuring out how to build these products, which are still fairly complex and quite technically challenging, within the overall budget that we and they had for the overall product. And so without getting into all of the details, because we have NDAs in place with them and we haven't announced things publicly, we have been able to get very creative on the economic side in order to figure out ways that we can satisfy our business needs and our customer can satisfy their business needs. And some of those things that we've learned from the economic side, as well as some of the things that we've learned from a technology side, because technologically building single-use devices there are some unique technologies you can bring to bear that help with the price points when you're doing single-use. The things we learn from the technology and from the economic side of things, business side of things, are going to help us to be better positioned for other single-use programs that we have going forward. And we already have a couple more that are in the pipeline that will benefit, again, both from what we learned on the business side and on the technology side. So that's an area that we're pretty excited about. We won't be the perfect solution for every single-use imaging system, but there's going to be a big chunk of them that I think will be able to be extremely competitive in. Again, because we've learned how to deal with the business issues as well as the technology issues.
Yeah. So, I think this is, I think it's an exciting story. I mean, I don't think many people know about you.
Mm-hmm.
But I think they should, and look, and we're going to just go back to, I'm not telling anybody to buy the stock. It's not what I do. I just simply bring out the facts, tell the story, tell the story. This isn't a paid for promotion. I'm not getting paid from you to do it. I'm doing it because I've been doing this a long time. I don't interview companies I don't think are going to make their shareholders money. That's the fact, right? I interview companies that I believe have they're in the right market for whatever reason. There's a good size, addressable size to that market. And what would you say the TAM is on your market? Can you throw a number on it?
Yeah, sure. I mean, we've looked at it, and at the level that we sell the medical devices at, it's like $1 billion.
And robotics, if I'm not mistaken, is getting more and more prevalent within the medical industry, right?
Robotics is part of it. Yeah, and they all need cameras.
They all need
cameras.
right.
Yep.
Okay. Yeah. And then those things get those machines get, it's like when you first saw the big, your first fax machine, right? It was just like gigantic thing, right? And then over time,
it's an interesting analogy, but yeah, it worked. Yeah, absolutely.
Right. I mean, and that's what's going to happen. That's what they shrink down. Everything shrinks down. The only thing that gets bigger is TVs.
Yeah.
Right? Now you got 90-inch TVs.
That's true.
But
that's true.
Look, you got a huge market, and then I look for a strong balance sheet, right? Do insiders participate in buying shares in the open market? Have they participated?
They have. We have. Yes.
Okay. It's another thing I like to see. I mean, and all of these things are just checking off boxes, building a case, right? I mean, that's all it is. Mm-hmm. Did a reverse split. Some could say, oh, that's a negative thing. I don't think it's a negative thing. I think it's a fantastic thing, because what does it do? It shrinks down the amount of shares that are available for trade. So then if you have some significant news that is, could move the stock, this is how you see stocks that go up 300% in a week. And I'm not saying the stock's going to go up 300% in a week. I'm just saying that's how things happen, is when you don't have a whole lot of shares, you have some really fundamental, significant news. And it's like, there's only one way you're getting shares, and that's if you pay up. And that's why they can have these crazy runs, right? Then you get the guys that don't know what the hell's going on and try to short it, and that just adds fuel to the fire. That's what happens with, low float stocks. So I don't have an issue with that. You guys have been through, if you look at the history, I love turnaround stories. I mean, I just love them, because, and especially if it's, part of the team, this is your father's business, right? You just said,
well, no, it's our shareholders' business. Well, just to be clear,
but your father started the business, right?
But my father started the business, and I should clarify that the family doesn't own much of the company anymore. There was a lot of dilution, particularly during telecom.
Okay.
And I'm still here because the board believes that we're moving.
That you're the right guy, right? 40 years. You just had your 40-year anniversary.
40th anniversary next month.
Next month. Pretty nice way to do it, right?
It is.
Uplist to the NASDAQ. Yeah. That's pretty cool.
That's kind of cool.
Yeah, it is kind of cool. I look at the stock, I look at what this, the market's been through. It's tough because of the reverse, but look, for a long time, the stock was in a downtrend for many years, right? Now, if you see, there was an inflection point here. Yeah. And it was in sense, okay, this was before the reverse, but there was an inflection point and you started trending higher. You think there are many charts out there right now? This is a weekly time frame, by the way. There are not many charts out there right now in this climate that have that look, that it's going from the lower left to the upper right? And that's going from what, 2019 is kind of when it started, right?
It's when we finally demonstrated that we could get beyond EBITDA break even, and we did our first acquisition. So it was the things people were waiting for us to demonstrate we could do.
And now I can see why your investors have been sticking with you, right? Because it's a stair step. Look, it's a stair step process, right? And you're a small company, but you're growing, and you've shown you can do good acquisitions. You can build good teams. You can build good products, obviously, right? And you can land some big customers. So these are all positives, right? And then I'm looking at this area here. If you take out, well, actually, it went up to 781. Look, it comes down to the 200-week moving average, which would be somewhere in this area, 450 to $5. I think that is a very good spot. A couple of things happening there. You got price support. You also have a trend line right there as well, right? I think the story is compelling. I think if you don't want to buy it today because you're scared that we're going into a massive recession, because everybody says we're going into a recession, then don't buy it today. But I would recommend putting it on your radar, right? Put it on your watch list. Joe, now, this is where I usually say, go to the investor relations page and sign up for their email alerts. But I can't, because they don't have them yet. But they can.
Go ahead.
Go ahead.
No, you were going to finish.
I don't want to steal your thunder. Go ahead, man.
No, what I was going to say is you can still go to the investor relations page and you can sign up for email alerts from our IR firm, which is the way that it's set up right now. But we are still growing, and we are working on getting things set up so that there's a more user-friendly investor relations page, shall we say.
But
and
I will say this.
It'll take a couple months, but
I will say this.
But in the meantime, you can get on that list, and by going to the
you can go to Lytham Partners, right?
Lytham Partners is our IR group. Yeah, that's right.
I happen to, look, I will say those guys are pretty damn good over there, Robert.
Yeah.
Right.
Yeah.
I mean, those
another good partner, another good part of the team.
Right. I mean, there's a lot of guys over there that are top notch. So, not the worst thing. I know that if you do reach out to Lytham, they are going to respond to you.
They are.
Right? If you want to talk to Joe, they're going to try and get you a seat with Joe. I can tell you that. Right.
Absolutely.
All right. So look, this is what I like to do. I want to continue. Here's what I would say. I already said it, right? Anywhere in this area, could it go down? Could the stock price go down to $3? Absolutely. It could happen, right? I'm not ever going to say that something can't happen in the market. It can. Do I think that's a big area? That's a really big area of potential support, right? If I bought it at 4 and it went to 3, am I selling it? No, I'm adding, right? That's me. I'm a long-term guy. I've been with you for a long time. I've been listening to your conference calls for a long time. Why? Because I want to know that you're a guy that does what you say you're going to do, which you have been. It takes longer, but you've never made excuses. You've never made excuses. You own up, right? And there's some things that are beyond your control as an investor. You have to understand that. Do I think that you're the right guy leading the charge and that you will get where you want to go? Yeah, I do. That's why I'm in, right? So, and that's why if it goes down to 3, was I happy about the reverse? No, I wasn't super happy about it, because I don't have as many shares now. Damn you. But that's okay, right?
They're at a higher
There's an
price.
opportunity. I just continue to add, right? So, I mean, look, I think, like I said, if you weren't familiar with the company, if you don't think optics is a big space that's going to get bigger, you're not paying attention to what's going on around you, right? It's going to get bigger. It's going to get bigger, and these guys are right in the front seat. And I would guess, I'm just thinking, they're probably going to do another acquisition. They're going to have probably more than one more acquisition, but that's just me thinking, right? When you have something significant, Joe, maybe after your next earnings report or a nice announcement, we'll have you back. We'll do a follow-up. Sound good?
That'd be great.
Okay,
That'd be
man.
awesome.
Hey,
Tim, thanks a lot for doing this. I appreciate it.
No, look, thanks for coming in and taking the time, right?
I love it.
Okay,
I appreciate the opportunity, and anyone who's listening, I
Oh,
appreciate you taking the time to listen.
Happy
For the whole
Thanksgiving
hour.
to you.
That's right.
Coco is saying happy Thanksgiving to you. Hold on. Hey there, all you stock market junkies. Thanks for tuning in to yet another CEO interview here at Alpha Wolf Trading. Today we had Precision Optics Corporation, Inc. CEO Joe Forkey, ticker symbol POCI. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.